First of all, thank you everyone for being with us today. As you know, today we are going to talk about lines of credit. The event is organized together with Mr. Luca Bernardinetti, Chairman and Managing Partner of Mahanakhon Partners Group, who kindly liaise together with United Overseas Bank Limited, UOB, bringing to us the very distinguished speaker, Ketsuda, Phanphruk, Head of Enterprise Banking under UOB. The topic of today, as you see, we're talking about line of credit, and they will try to give some information, especially now for the businessing during COVID-19, talking about solution with MPG and a UOB bank. I would like now to leave our virtual stage to our first speaker, Mr. Luca Bernardinetti. Luca, now the stage is all yours.
Thank you, Michele, for the kind introduction. All right, okay, so I would like first of all to welcome today's webinar attendees. And today's presentation will delve into the application process to lines of credit for domestic and cross-border business transactions. The ambitious title, as you can see, is How to Get Lines of Credit. We'll also expound on a few different lines of credit for businesses, especially involved in trade, both in Thailand and overseas. Short introduction to the Mahanakhon Partners Group. For those of you who are not yet familiar with our firm, MPG is a professional services firm headquartered in Thailand with an ASEAN presence and a global footprint. In September 2019, we celebrated the 20th anniversary of our firm, which was founded as Vimami Consulting, which was an English and German-speaking law firm, and was rebranded as MPG in 2016, further to a merger. In short, here is what we do. We are first and foremost a law firm, and we provide a rather large range of legal services as we employ lawyers with diverse experience, each specialized in an area of practice. We have a large corporate services practice, assisting SMEs as well as multinational enterprises with their businesses in Southeast Asia. We also employ tax attorneys, accountants, and auditors, providing a wide range of accounting and tax advisory services, including tax planning and transfer pricing. We provide management consulting services, including capital projects management. We assist with employment, visa, and work permits. And last but not least, very relevant to today's webinar, we assist companies with their finance requirements, whether for inbound or outbound investment, corporate finance, and trade finance. We have established a global footprint thanks to strategic alliances with world-renowned management consulting, financial services, cross-border M&A, and law firms. Our partnerships enhance and complement a range of corporate services in support of our clients' diverse needs. As you can see on the slide, our own offices and partner offices cover Asia Pacific, Europe, and North America. As I mentioned, we would like to start our presentation with some brief notes about the joint emergency decrees taken by the Ministry of Finance with the Bank of Thailand. We want to delve into specifically what banks are doing right now. Then UOB clearly will provide an overview of what they are doing at the moment. As you can see on the slides, the measures consist of the first three phases. There have been many more, but in the interest of time, we're going to briefly address the first three issued between March and April this year. I would like to add, if you want more information about this, all the information in this presentation can be accessed on our website, mahanakornpartners.com/news. So let's start with phase one, which is subdivided into financial and fiscal measures. Among the financial measures, there's the allocation of 150 billion Thai baht for soft loans to SMEs at very competitive conditions. Specifically, you can see on the slide that SMEs will be entitled to borrow up to 20 million baht for 2 years at the interest rate of 2% per annum. Furthermore, there is a grace period extension for principal and interest repayment pre-existing lines of credit, so it's retroactive, with reduction of interests and extension of amortization plans. In addition to the issuance of new loans, banks have also been instructed to relax their creditworthiness criteria. I'll explain what creditworthiness means in a little while. There's more market liquidity and to provide more competitive terms and conditions. And also there are employment support measures. Let's move on quickly to slide number 7. You have fiscal measures, which include the reduction of withholding tax for income deriving from professional services, such as hour work, higher work, awards, rebates, sales promotion, etc. Also withholding tax, you're all working in China, you're probably aware of the fact that it's been reduced to 1.5% from 3% until the 30th of September. And furthermore, will be reduced to 2% from the 1st of October until the end of the year. It's also worth mentioning that the only way of filing withholding tax from the 1st of October will be with the e-withholding tax filing system. Also, VAT operators participating in a good exporter program will enjoy an expedited VAT refunds, which will be granted within 15 days with the e-filing and 45 days for the paper filing. So it's a rather swifter method than usual. And additionally, also SME income not exceeding 500 million baht with less than 200 employees and register for tax amnesty can deduct 150% of the interest paid on soft loans from the 1st of April through the end of December 2020. Last but not least, you can see that companies can deduct 300% of the cost of salaries of their employees. Can I ask please to mute your microphones? For today, employees, provided that the income does not exceed 15,000 baht per month. I just want to go over these slides very quickly because probably you're all aware of most of these measures. On these slides, you can see several measures for businesses such as SME loans to enhance business liquidity and ease the burden on of business expenses for SMEs. So most of these measures are focused on SMEs, but also larger companies enjoy a number of incentives. For example, there's the among these businesses, there's the businesses operating in hospitality and transportation, tour company, hotels, and restaurants. Also, the SME Development Bank has issued loans up to 10 billion baht with a 3 million baht loan credit ceiling, and interest rates are very competitive at around 3% for the first 2 years. Their credit application, which are accepted, are being accepted now until the 30th of December, and submission and payments also for tax, including corporate income tax, withholding tax, and the VAT have been postponed, as you all know, been extended to the 31st of August 2020. There's also postponement submission of payments for tax returns, including all types of taxes, such as VAT. And also the Revenue Department allows businesses in the oil industry submit their tax returns within the 15th day of the following month in which the goods are removed from an industrial facility or bonded warehouse. Relevant to this webinar is the fact that there are tax exemptions for income obtained from debt remission, as well as the proceeds resulting from transfer of assets, sales of goods, or provision of services due to debt restructuring. And debt restructuring is also part of the measures for with a retroactive force. Speaking of loans, also this includes the transfer of properties encumbered by mortgages and relief for writing off bad debts from accounts receivables. We don't want to talk too much about taxes in this webinar, so I'll go on to phase 3, which is a snapshot of economic and financial measures, such as the improvement and rehabilitation of the economy by issuing a line of credit up to 1 trillion Thai baht. So this is the one of the heftiest measures taken by the government so far. Also measures for economic and financial stability, specifically the issuance of soft loans up to 500 billion Thai baht, So SMEs that wish to apply must not be in the international market, nor have non-performing loans as of 31st of December. So this is a very important, clearly, factor, even though creditworthiness criteria have been relaxed. So these companies, specifically SMEs, can receive additional credit not exceeding 20% of the original loan, up to a maximum of 100 million Thai baht. So the original loan would have been not exceeding 500 million baht. There's also been the establishment of a corporate bond stabilization fund. I don't know if Kumpui of the UOB can say more about that. To our knowledge, has not been very active so far within the scope of these measures. But essentially, the Bank of Thailand is supposed to buy and sell investment liquidity of units, in the said fund, and to promote market functioning. And also this fund would then buy bonds to help increase liquidity of high quality companies. Those include companies that have experienced a temporary liquidity shortage due to the COVID-19 pandemic, but are overall showing a continued financial health. And then you have the last column of this slide, other measures, which include a 1-year extension of deposit protection for deposits not exceeding 5 million baht to August 10th, 2021. The previous deadline was 2020. Low interest credit measures for non-financial business operators, temporary interbank lending rate cuts to 0.23% per annum, and others. So I just want to focus on this last slide a little longer. This is, as you see, there were over 2 trillion Thai baht allocated to lines of credit, most of which were deliberated in phase 3. After phase 3, the cabinet provided and approved other liquidity injections. So as of today, we believe that the government's economic and financial measures have exceeded $70 billion. So now Thailand is, as we are happily witnessing, is cautiously restarting business. There are almost 0 active cases of coronavirus in Thailand at the moment. And the country is ranked 2nd in the global COVID-19 index after Australia, and 1st in Asia in the same index. So in the core of this presentation now, we'll now look into our banking and finance practice and illustrate the ways in which we assist businesses with their finance requirements. It's a bit wordy slide, but you can focus on the central graphic, which is the ABC of financial analysis, or rather the 5 C's of credit. So the 5 C's of credit is a system used by lenders such as UOB to gauge the creditworthiness of potential borrowers. So this model weighs the 5 characteristics of the obligor and conditions of the loan, attempting to estimate the chance of default. So consequently, the risk of financial loss for the lender. The 5 C's of credit are character, capacity, capital, collateral, and conditions. The first C is character, which is reflected by the applicant's credit history. The second is capacity, which is the applicant's debt to income ratio. More on that in the following slide. The third C is capital, which is the amount of money an applicant has. The fourth C is collateral, which is an asset that can back or act as a security for the loan. And the fifth and last C is conditions, which is the purpose of the loan, the amount involved, and prevailing interest rates. So character, and those are all sometimes not objective factors, but rather subjective. So character, for example, is a lender's opinion of a borrower's general trustworthiness, credibility, and personality. Banks want to lend to people who are responsible and keep commitments. It's assessed from your work experience, credit history, credentials, references, reputation, and interaction with lenders. The second C, capacity, or you can call it also cash flow, is a borrower's ability to repay the loan. So lenders want to be assured that a business generates enough cash flows to repay the loan in full. It's assessed from financial metrics and benchmarks such as debt to equity ratios, cash flow statements, credit score, borrowing and repayment history, and so on and so forth. We'll delve into that in the following slide. Capital is simply the amount of money invested in by the business owner or management team. So banks are more willing to lend to owners who have invested some of their own money into the venture. It shows that you have, so to speak, some skin in the game. Then conditions are both intrinsic and extrinsic. For example, there are conditions of a business, whether it's growing or faltering, as well as a company with, for example, how will a company use the funds that they are applying for. It also considers the state of the economy, the industry trends, and how these factors might affect a company's ability to repay the loan, which is why the financial measures by the government are very relevant at this stage. So to ensure that loans are repaid, banks want to lend to businesses operating under favorable conditions. So this C is assessed from a review of the competitive landscape, supplier and customer relationships, and microeconomic and industry-specific issues. And then we have collateral, which is assets, basically, can be both physical assets or financial assets, which are used to guarantee or secure a loan. Collateral is the backup source if the borrower cannot repay a loan, so in case of default. It's assessed from hard assets, as I mentioned, such as real estate and equipment, working capital, such as accounts receivables and inventory in a borrower's home that also can be counted as a collateral, an office, a factory, a building, and so on and so forth. Let me just underscore that collateral alone is not sufficient to be deemed creditworthy, but it's many instances a required condition for banks. So how can MPG help? This is a slide summarizing our legal and financial due diligence, which is going to be included in a report that we share with lenders. 3 metrics we pay attention to are assets, liabilities, and equity, which is a company's total assets minus its total liabilities. So we would assess a company's working capital ratio or current ratio, defined as a company's current assets divided by its current liabilities, as you can see in the formula. Current assets are usually defined as assets that are cash or will be turned into cash in a year or less. Current liabilities are liabilities that will be paid in a year or less, and it's also referred to as the working capital ratio because it helps to understand more about a company's ability to cover a short-term debt with its current assets. So a company with a current ratio less than 1 may not have the capital on hand to meet its short-term obligations if they were all due at once. While a current ratio greater than 1 indicates that a company has the financial resources to remain solvent in the short term. However, this is a double-edged sword because the current ratio at any one time is just a snapshot. So it's usually not a complete representation of a company's liquidity or solvency, which is why we have 5 C's as opposed to 1. For example, a company may have a very high current ratio, but its accounts receivable may be very aged, perhaps because its customers pay very slowly, which may be hidden in the current ratio. So analysts must also consider the quality of a company's other assets versus its obligations as well. If the inventory is unable to be sold, the current ratio may still look acceptable at one point in time, but the company may be headed for default. And then you have the last bit of the slide is debt to equity ratio, which is a comparison of a company's total liabilities to its shareholders' equity. It can be used to evaluate how much leverage a company is using. So the higher the leverage ratio, the higher risk to shareholders. However, let's bear in mind that a debt to equity ratio is difficult to compare across industry groups where ideal amounts of debt can be very different depending on different industries. So investors will often modify the debt to equity ratio to focus on long-term debt only because the risk of long-term liabilities are different than short-term debt and payables. Moving on to corporate finance, we assist clients with corporate finance, trade finance, and project finance advisory services. So in corporate finance, we distinguish in short, medium, and long-term financing, as well as contingent lines of credit. So for short-term financing, working capital solutions would be the most appropriate because they are short-term lines of credit with a term not exceeding 1 year. So they're not suitable for example, for the acquisition of long-term assets or investments. Their key features are that they are normally easier to obtain. They cover gaps in in net working capital, which is the difference between a company's current assets and current liabilities. It does not require equity, which is very important for businesses. Businesses might may be eligible for unsecured loan or secure loan depending on the credit. So that is also an assessment that banks would do based on your credit history, not only on your collateral. Then you have, for example, CAPEX loans. So for long-term financing, a company may need financing for the capital expenditures to undertake new projects, purchase machinery and equipment, purchasing or building offices, factories, warehouses, etc. So from a financial reporting standpoint, CAPEX is shown on the balance sheet as an investment rather than on the income statement as an expenditure, which is also very important for an assessment the banks do. So bank overdrafts, on the other hand, are flexible short-term credit facilities. Interest rates are only charged on the portion of money that is actually used and not on the total amount that is granted. So for example, if a bank were to grant a company 100 million overdraft and the company were to use only 20% of this amount within a month, so the interest would be applied in arrears. So depending on the amount of the overdraft which is used and divided by the number of days in a year, multiplied by the number of days that it is currently used. So generally, an overdraft account will be an integral part of a company's cash management, which is typically including an offsetting arrangement against other companies' accounts. We've spoken about corporate finance. Now, just a few words on trade finance, and then I'm going to skip most of the slides of this presentation. I want to leave more room for UOB. So why is trade finance necessary? Well, the main objective, I'm sure that many of you are in international trade, importing or exporting. The main objective of trade finance is to make import and export transactions possible for both SMEs and multinational corporations. Particularly small businesses often have very limited access to loans and other forms of interim financing to cover the cost of goods they plan to buy or sell. Businesses may be reluctant to have the money tied up in shipments of goods that could take weeks or even months to be delivered from overseas manufacturers. On the other hand, exporters of large amounts of goods can always afford to wait until the export products have arrived at some distant destination, weeks later before receiving payment. So there's some statistics that I want to throw in. Like the World Trade Organization estimates that about 80 to 90% of world trade, so 90% is basically all world trade, all relevant world trade, relies on trade finance, which helps goods keep moving and even when companies don't have enough cash flows internally to finance the transaction themselves. So what are the benefits of trade finance? Well, trade finance instruments reduce transactional risk for both exporter and importer, which is achieved by means of credit substitution. I don't want to be too technical here, but this means that the risk of payment against delivery is shifted from the importer and the exporter to their banks. On this slide, you can see an example in which a Thai importer, company A, buys goods from a Chinese exporter, company C, by means of an intermediary or trade agent company B. So in this scenario, it may take several weeks for the goods to be shipped to the importer's warehouse. On the other side, the exporter may feel reluctant to ship the goods prior to receiving a full payment. They never met each other, never done business with each other, they don't trust each other. So in this case, a letter of credit with perhaps import financing for the importer and export bill discounting for the exporter may solve this catch-22 and make the trade possible. Right, now we have a lot of slides about several trade finance instruments, including documentary credit, import and export financing, documentary remittances, factoring, and demand guarantees, as well as a few sample guarantees in construction contracts. I just want to go over them very quickly. Then if you have any questions in a Q&A session, I'll be happy to address them. So demand guarantees are frequently used in construction contracts. When a company invites tenders, it is often required to submit a bid bond to cover the risk that the company will not sign the relevant agreement if awarded a tender. After that, an advance payment bond is required to ensure the repayment of an advance which the EPC contractor, EPC stands for engineering, procurement, and construction, has received or will receive for construction work to be done. A performance bond is necessary to secure a construction company's fulfillment of its contractual obligations. The issuing bank undertakes to pay compensation up to a certain amount to the beneficiary in case the construction company fails to build the project on time and according to the contract specification. And then a warranty bond, whose purpose is to cover the construction company's obligations after it has completed its work during the contractual warranty period. So now that we've learned the credit assessment process and different types of lines of credit, in this last section, we'll also cover additional business services MPG provides to companies of all sizes. This is financial and regulatory reporting. So all companies, and especially businesses that wish to apply to lines of credit, need to ensure constant compliance with regulatory requirements. So this is also part of the, this is a section of our report that we submit to banks. On this slide are a few of the areas where MPG helps businesses comply with these regulations. For instance, MPG sends monthly financial statements to clients. We prepare financial reports along with taxes. And we don't only do it accounting, but also the tax planning for companies a year in advance, which is always useful for planning lines of credit ahead. So we're a one-stop platform that assists companies with legal, accounting, and auditing, tax advisory, and regulatory compliance, especially necessary in the elaboration of credit scores. And as we all know, COVID-19 has disrupted many business activities and legal proceedings. However, they have recently resumed, so we've been rather flexible in these times. We've been continuing to consulting with clients, facilitating company and corporations, and do legal advising over digital platforms like this one, like Zoom. In addition, if you have any questions about impacts of COVID-19 on businesses in Thailand, please feel free to contact us. For instance, the Thai government's response to stimulus packages, changes to tax and customs laws on how the, for example, the ICC is adjusting its rules in response to COVID-19. For example, there's a webinar that the ICC has organized and about how force majeure clauses are amended in finance, in trade finance contracts as a consequence of the COVID-19. So if you'd like further information, we have published a number of articles on these topics on our website, and you can check also check us out on LinkedIn and Facebook. So I would like to, without further ado, terminate my introduction, and I would like to leave the floor to Kun Ketsuda, Kun Pui, Executive Director of UOB. Kun Ketsuda, the floor is yours.
Thank you, Luca.
Hi, good morning, everyone. Loud and clear, right?
Yeah, we can hear you. We can see the slides.
Okay. First of all, I would like to thank TICC and MPG to having me here to present what is UOB and what we are doing. Okay. For right now, for the next slide, please. For UOB, as a background first, because some might not know the UOB. UOB is the established as a Singaporean bank for 85 years already. Right now, we have the rating of AA1 from Moody and AA- from Standard & Poor. For the next slide, right now, next slide, please. Right now, growing from a Singaporean bank, right now we have over 500 offices over the globe within the 19 countries. We have several branches in Canada, USA, UK, France, but whatever majority is still in Asia. We have Australia, we have China, Japan, Taiwan, Philippines, India, and majority is in ASEAN. For the next slide, please. As a head office is in Singapore, we have 63 branches in Singapore. In Thailand, we incorporated since in 2005 with 155 branches. We have strong presence in Indonesia, Malaysia. For Myanmar and Vietnam is rather new, but we have 1 branches in Myanmar and 2 branches in Vietnam. For the next slide, please. The question is that how UOB can ride with the strong network and how we can help our clients and potential clients to do the business in ASEAN and in the global platforms. Right now, UOB is the first regional bank to set up the FDI advisory unit. The FDI advisory unit, actually the full name is Foreign Direct Investment. This team, this FDI team, that will help investor both inbound and outbound to have the one-stop service. Why we do need to have the FDI? Because we believe that investment inbound and outbound, for example, like Singaporean persons, Singaporean company would like to invest in Thailand. They have many rules and regulations. Many investors that would like to have additional in-depth information about Thailand in terms of rule regulations, market platform, who is the legal and accounting advisory that is good enough for them to do the business. This kind of thing for our foreign direct investment team will help the investor to get the good consultations. We will have the linkage with the local officer who do the promotions of the investment promotions in local countries. FDI, we have right now we have FDI 10 of FDI center, which is located in China, Japan, Hong Kong, Myanmar, Thailand, Vietnam, Singapore, Indo, Malay, and India. So next slide, please. As I told you that the FDI is the linkage between home market and the target market. That will help the linkage between the government investment promotion agency with our clients. And then we can suggest you the legal advisory, tax advisory, market consultation that is good enough for your business. This is specific for your business. And on top of that, they will help the linkage with the local UOB staff to help you with the financial need that you may have. Because when you have build the new company in the new country, you might need the financial support from the bank also, which we have this in part of the all in with the FDI service. In FDI service, we still have the sub task force to do on the, for example, like Chinese tax. This Chinese tax, they will help on the right of the Belt and Road Initiative to help you with the on growth of the China in the region. and also the CLMV, which we believe that in Thailand we are center of CLMV. The business expansion is going to be in Thailand and neighboring country. So we have the task force doing this, taking care of CLMV also for this one. For the talking about the local support of the Thai, UOB Thai, since the beginning that told you that the UOB Thai has a bit in Thailand, countrywide. So we have in up country also, in northern parts, southern parts, northeast, we have all in 155. So we providing full banking service for the clients. When we say full banking service, we mean that we have group of retail and group of wholesale. Group of retail is more on the personal need and small business. For the personal need, we have personal banking service on this one. Personal banking service, you might thinking about mortgage loan for your homes, home loan, for your credit card and your personal financing, short terms and something like that. And in terms of your deposit, your investment, for the small business in retail group, we have a business banking department, which business banking department that will taking care of the small business. For example, like the one that require the financial support less than 50 million baht. So this one is going to be within group retail. For the group of wholesale, it's going to be concentrated on the big corporate. You can go for the next slide. For the wholesale banking, we have several departments within this one. We have corporate banking and commercial banking. This corporate banking and commercial banking help support your financial need. What the difference between corporate banking and commercial banking? The commercial banking is taking care of clients with revenue about 400 million up until 7 billion. Anything revenue more than 7 billion is going to be taken care by corporate banking. So most of the conglomerates is under the corporate banking. But the product under the commercial banking and corporate banking is quite the same because we are supporting on the financial need of the company. For transaction banking, which is within the wholesale banking group, transaction banking is they're taking care of the cash management, trade transactions, and supply chain management. We will touch a bit on this one later. Within wholesale banking, we also have the investment banking group. The investment banking group, they're taking care of most of the M&A transaction, privatized, IPO, syndicated loan, those kind of things that is more complicated requirement for the financial requirement. This one, since we also linkage with our platform also, our strong network also. So that's why when we have the inbound investment from other country or outbound from other country also, our local will have the linkage with the group relationship manager to help the clients to do the business and financial need in the target country. For the next slide, please. This one is the in-depth of the financial product that we have. This one, Lucas has touched a bit on this one, but I will touch on, I will not try to duplicate with the Lucas. For overdraft, this one is going to be the liquidity management. For example, like when you have the short terms, we will say like couple of day requirement to bridging on the short term requirement of the liquidity. This one will be on more on the short terms overdraft. For longer term side, for example, like couple of months, couple of 3 months, 6 months, 4 months is more on the short term product, which is short term might be on the PN, promissory note for the domestic transactions, or LCTR, which is Lucas already discussed that this one is for trade transactions. For bank, we have the working capital to support the short-term requirement of the company. For other long-term requirement, for example, like financing for acquired fixed assets, might be for acquired land and building or machinery. This one we also support by fixed asset, fixed long-term loan. Long-term loan is more on the terms of the loan is more like 2 years, 3 years, 4 years, according to the business type of the company. Including for support of investment banking, we also have the loan to support the M&A transactions, merger and acquisitions, or the capital injections on this one. For some particular industry, for example, like construction, infrastructure, hotel, real estate, hospitalities, this kind of thing, we also have the project financing loan to support this one. Within project financing, we might have the short-term financing to bridging some liquidities and long-term financing all in together to help the clients to finish their project. The next slide, please. Within UOB, we have a new initiative for a couple of years already. For this one, we call as Sector Solution Group. Within Sector Solution Group, we segregate our clients' industry into 6 industry, which is industrial, consumer, construction and infrastructure, oil and gas, telecommunication, media and technology, and the last one is real estate and hospitalities. It looks very small why we have only 6, but actually within that 6 we still have the subsector. So with all the subsector within 6 big sector is cover almost every sector in entire business. What is the idea behind the Sector Solution Group? Since we believe that if the RM or relationship manager, UOB staff understand more of the company business, then we could support better and we could help you to grow business faster. So then within the Sector Solution Group, we will have group of expertise in each industry and each sub-industry to help console industrial knowledge in each country and in regional platform, and translate this information to the local staff to help clients to make sure that the clients have sufficient strong information to run their business, including the product that the bank would like to provide to the clients is suitable with the clients and good to support growth of the clients. For example, like you might know that construction contractor, the businesses might be totally different from the hotel, and they might be totally different from the retails and the metal trader, that kind of thing. Each of them, they have specialty, they have specific knowledge, and they have specific requirement. So that's why in UOB, we have Sector Solutions Group, which is the group of specialty in each business and each subsector to make sure that local RM, they have full knowledge of this one. And we will able to help the clients to do this business and grow faster and better support the clients. The next slide, please. You can go the next slide. This is the SSG. Okay, for the trade transaction, the transaction banking that we previously discussed about that. This one is within the group wholesale banking. For cash management, this one we believe that each industry they have specific requirement to manage the cash inflow. For example, like some retail, they have coin, they have note coming in every day, they have cash coming in every day. How to manage cash to be efficient and low cost, and including the high yield. So this cash management will help you with that one. We will have the liquidity management. We will have the payable, receivable solutions for you to help you with the pile of cash coming in or check coming in, how to manage that. This one is going to be on the cost saving of the company to help this one, and monitoring of your fund flow. For trade finance within the transaction banking sector, the trade finance is going to help you on the import and export transactions, including the guarantee for the construction industry, also the payment, trade payment along among the counterparty, including counterparty banks also in this one. And financial supply chains is to help you benefit more on your AR, your access account receivable. For the next page, please. For transaction banking, as I told you that this one is on the to manage your cash inflow and outflow, to make sure that you will have the cost efficiency and enhanced control of your fund. This one we will have on the both sides, on the receivable side and payment side. And this one you can control by in our system, in the intranet system. So you don't need to have the asset. For this one, let me have the example for you. For example, like some company they have to collect cash every day. And that cash, how to make benefit of that cash. When you have the salespersons, like 100 salesperson going out to collect cash, how to make it safe, security for them, for the salesperson itself, and how to make sure that this cash will not lost along the way, and you get it back as soon as possible, and monitoring is quite clear. We have the solution within our cash management team. And within this, if in the case that you are in Singapore and you manage your subsidiary in several countries, then within BIB Plus, you can access from Singapore, and with single sign-on, you can go along accounting in Thailand, Singapore, Malay, within single sign-on. This one is within under our cash management platform also. Next slide, please. Next slide is under trade transactions. The trade service is more on the import transactions and export transactions. For the import transactions, as Lucas already discussed that, this one for the import, since we are in Thailand, some seller, some supplier in Europe might not know us and might not believe that we will make the payment. So bank coming in to guarantee the payment for this one. So under the instrument of LC and TR and collection system, to make sure that first of all the product will be delivery on times and with the qualification that we asking for, and then the supplier can ensure that we can make the payment for that one. Export also for this one. For example, like in Thailand, if we have the export bill and then we would like to have the financial support from that export bill, we can discount this export bill to get the liquidity for producing the good for them. For the guarantees, I believe that Lucas already mentions about guarantee for the construction contractors. This one is we can support that also for the as a project financing. And factoring, this one is the AR discount. We can make use of our account receivable to make the liquidity on this one. The same as the next slide, please. The same as the supply chain management. The supply chain management is more on the when we sell the product to the big conglomerate, the anchor that we call it anchor. For example, like we are small productions warehouse, production company, and then we would like to sell to Lotus, Big C, which is big conglomerates, and the payment of Big C and Lotus is quite permanent. So then we can make use of our account receivable in this one by discount this AR, this account receivable with the bank to get the liquidity to your business. This one is going to be on the supply chain management to make sure that you make benefit of your working capital, your operating asset. The next slide, please. This one, I already touched a bit on the global treasury management. We have the system linkage between Singapore or actually all over the place of the UOB Group. Within UOB, we have the single platform, which is used within every office of UOB. So in the meaning is that when you are in Singapore and you have subsidiary in several countries, you can use single sign-on to control, manage, monitor every account of your subsidiary. Next, please. Since this one is, we're talking about the trade financing, we're talking about the foreign direct investment to support your inbound and outbound investment. I believe that when we go abroad, when we have the trade transactions, one of the key things is the foreign exchange, which is quite risky for many companies. So when we have this one, we urge our clients to hedge our FX, to guarantee that to fix our cost, either to fix our cost, to fix our revenue, to mitigate the risk of FX fluctuations. In this one, in global market product, we have all to mitigate the risk of the FX, the commodities. For example, like if you majority of your raw material is related to the oils, so then you need to make sure that when the oil price is not pump in and drop out, it's not gonna affect your business. Then you need to do the commodity with your oils to mitigate the risk of fluctuations. This one also, everyone can have the interest rate fluctuations also, especially for the long-term loan. For example, like long-term loan 5 years, but right now this is the bottom of the interest rate already right now in the time of COVID. So you would like to make sure that in the time of the business growing up, business resume, interest rate is not shooting up too fast. So then you might need to have the interest rate swap to make sure that you mitigate the risks of interest rate fluctuations also. Within this, we have the global market to help you with mitigations of these fluctuations of rate and everything. Next presenter, please. For the investment banking, this one is more for the complications and for the merger and acquisitions. We will have this one, we will have investment banking team to help the clients who need more complexity of the financial requirement. It might be from the very big size of the loan, which need syndicated loan among 2 or 3 banks, that kind of thing, or the infrastructure project financing, which might require the PPP with the governments, that kind of thing. So we have several product to cater with the investment, the big investment in both in terms of the debt and in terms of the capital and equity size also for this one. We could help on the merger and acquisitions, leverage financing on this. For the next slide, please. After all that, we help the company to meet their financial requirement. We also help the company to run the normal business also for corporate card. For example, like when we have the staff to travel, sales staff to travel all over the place to make sure that they got the sale target, that kind of thing, we may need to able to control their petty cash, their revenue, their expense that they use each time. So we have corporate card, we have purchasing card, and central travel account to make sure that the company can control the expense, the sales expense and operating expense to be within the budget. This one is more on the efficiency and control and cost efficiency of the company. The last slide, I believe the next one is the last slide, right? The last one is this one. Is when we taking care of the company already, we also would like to taking care employee of the company. This one is extra benefit of the company that is banking with us. We would like to help their employee to make sure that their employee also have the good welfare. For the company that is bank with us, the employee will have some benefit which is better than our board rate. For example, when they make the deposit, our deposit rate is going to be better than board rate. When they do the home loan is going to be, interest rate is going to be less than our board rate also. This one, so we within UOB, we try to provide service to our clients in full length from the beginnings, starting the company, financial need, growing up to export, import, cash management, until you expand out. We have the product to support you all the way to the big conglomerate. That is all for UOB.
Thank you very much, Kun Ketsuda. Now
you.
I would like to leave some space also to the participants, and if they want to type any questions. In the meantime, I would like to ask those presentation. Mr. Luca mentioned that his presentation will be available on the Mahanakhon Partner website. And I would like to ask also if Kun Ketsuda can share the presentation or partially part of the presentation with the participant today. But I don't know the policy of UOB.
Let me check. If I can, I will send to you and you can share to the audience. Let me check and get back to you, okay?
Okay.
But in the front page, actually, I put it in my names and my contacts. If in the case that anyone would like to have deeper information or would like me to contact either for the retail group or the wholesale group, you can, I can be the center for you to get the linkage within UOB, let's say within UOB. Thank you for that.
Thank you. In the meantime, we receive in the chat like first question to Kun Ketsuda is about how FDI department could help with financial requirement when company initiate outbound investment?
Okay. Actually, at the beginning, as I told you that the FDI group, they work with, let's say like this, within UOB, we have FDI and we have several teams also. FDI teams, they will have the linkage with the local staff to extend this opportunity, the investment opportunity to the local staff also. And then we have a system called Global RM and Field RM. RM is the relationship manager, which is marketing to you all. For global relationship manager, for example, like if you are in Singapore and then you would like to expand to Thailand, relationship manager who taking care of your business in Singapore, we will call it group global RM, and then RM who taking care of your business in Thailand, we will call as a field RM. GRM and FRM, they will talk together to make sure that they have the same information about this group, and then they could help how they can help the company as a group basis. So within UOB, we have the system to link between the group RM, global RM and field RM to make sure that the clients have the access to financial requirement, and also the FDI persons, FDI folk will help to seamless touch between this one also. So we will have the system to link between the mother company and the child company in Thailand also on this one. And when we do the credit package, we will do as a one credit package to bundle all everything, including Singapore and Thailand.
Okay, thank you very much. Perhaps for the detail, I invite also the participant to contact directly with you or with Mahanakhon Partner after this presentation. And we have also another question. For corporate financial support, do the bank has preference size of a business? If a company is still small or just established in Thailand, are we eligible for credit limit?
As UOB is the full service bank, so we have the group retail together, the small business, and the wholesale together, the bigger size of the business. But I believe that the question is more on the coming in and new established company. For the investment, the inbound investment, and they are quite new in Thailand. For example, like they have strong base in Singapore and then they are move inbound investment in Thailand. They are quite new in Thailand and they are just newly established. Normally in as a legal and regulations of Bank of Thailand, we have to be more prudent for the newly established company to lend the money to the newly established company. But with the the system in UOB Group, we can help escalate relationship from Singapore to Thailand. For example, like you have strong relationship with UOB Singapore, then we will onboard of that one with the reference from UOB Sing to jumpstart in Thailand, that kind of thing. So we can do that for the company that is inbound investment from other country.
You'd like to add something on that? Thank you, Ketsuda. It's very applicable to companies also that have a parent company in Europe, for example, in Italy or in other countries in Europe or in other parts of the world, not necessarily in Singapore. So we have many instances in which We have opened branches of very large companies, large European companies, which are newly established small companies in Thailand, and they benefit from the relationship that they have with the bank also in other countries. So this is a very important factor, because actually the parent company may pledge guarantees for their branch in Thailand, although the company per se would be just a startup. So this is very relevant also for companies, which we just wanted to mention, that are branches of Italian or European firms.
Thank you, Luca, for adding some more details. And probably it's related to another question, because in some case they said, in case our head office is in Singapore, do you have any tool to manage account from Singapore?
Yes, actually, as in UOB Group, we have only one platform, which is used within all office of the UOB. So when you sitting in Singapore and you register within Singapore, you can have the platform that is within single sign-on. You can monitor cash, monitor fund flow from UOB Thai, from UOB Myanmar, from UOB Malaysia within single sign-on. And within the same platform, you can also issue the trade transactions. You can issue the PN, which is short-term financings of that also. Actually, we have many clients who have the head office and treasury office in treasury. Don't need to come to Thailand to sign the check or to sign the agreement. We can have central treasury over there and make the benefit of that.
Okay, thank you. And perhaps a question for Mr. Bernardinetti. And I would like to ask, for example, MPG, we saw that in your presentation, you take care of several markets. And can you become like a meeting point also for those companies to better understand bank policies when they land, for example, to Thailand? For example, as a Chamber of Commerce, we've been addressed by several Italian companies, for example, but the work that we do as a chamber is mostly related to find business partners or establish a legal entity in locally in Thailand. But for example, in your case, we saw that you provide with services on a financial level. And how do you see yourself in supporting, for example, foreigners willing to establish business here, relating them to banks?
Yes, this what we do mostly for foreign companies. So we do have Thai clients, which are mostly either large joint stock companies or companies that normally don't require much financing, although they do have their fair share of debt. We do work with a number of companies that are multinational, so they have a presence in, for example, in Italy, in Europe, in other countries, and they open the branches in Thailand. And their relationship with banks clearly is different, because they are not familiar with the market, they're not familiar with the onboarding process, they're not familiar with the know your customer questionnaires, and all the other requirements that they need to comply with in order to be approved for example, lines of credit. That does not necessarily apply to lines of credit, but also for example, banking relationship in general. And Ketsuda has given an overview of also the importance of having an RM in place per company that can deal with all the aspects of doing business with banks. So this is mostly what we do with companies that are foreigners investing. So FDI, inbound investment. There are many areas, sure you're familiar with our work in capital projects and infrastructure. So we also advise banks sometimes in demand guarantees for those projects. So for private companies, it's very important to understand, to have an understanding of the market, to understand the intricacies of, for example, regulations and the law. And then more specifically, when they apply for credit, they clearly need to be compliant with the eligibility criteria that each bank has. And that is important, that it's first good impressions do matter. So you want to make a good impression the first time you present your company to a bank, because if you're rejected the first time, then it may be more difficult the second time around to get a line of credit. So the answer is yes, we do it for companies from diverse, from different countries. And we clearly work with banks that are very interested as well in working with foreign direct investors, and UOB is one of them.
Okay, thank you, Luca. And perhaps I would like to invite the audience, if they want to type any question, or perhaps if anybody attending the webinar would like to address on a specific question. We have some attendees that are business owners, and perhaps they might have something more specific in their case. But I don't know, maybe if they don't want to share business information publicly, of course, we will put them in contact directly. Okay, we have a question that is actually interesting, like perhaps could be for both for Luca or Ketsuda. Is about the common pitfalls in trade finance. Trade finance is something that is not easy to understand, and small medium enterprises, while growing, might have also the chance to work with several banks, expanding the business. But of course, we need to be careful about problems that you cannot see. And for example, Luca, would you have any suggestion to avoid pitfalls in trade finance?
Sure. Perhaps I could address this from a law firm's perspective, and then Phanphruk could address it from the bank's perspective. So from our perspective is there's commonly a misconception of trade finance instruments, agreements, for example, the aforementioned letter of credit, documentary credit, standby letter of credit, and demand guarantees as integral part of a contract, which is in fact the underlying contract. Just an example, we're talking about guarantees in construction contracts. So one of the main characteristics of any type of trade finance instrument is that they are independent of the underlying obligation or the underlying contractual arrangements. For example, when banks are required to honor a first demand guarantee or demand guarantee, they must do it upon first demand, as the name implies, and they would not be liable to understand whether or not there was a breach, for example, in the underlying contract, because this is not a banker's work. Another example could be a documentary credit or transaction which is underpinned by documentary credit, for example, of a supplier that sells, let's just say, shoes, for the sake of an example, from Italy to Thailand. So banks would have to honor the terms of the documentary credit regardless of whether the quantity and quality of the shoes that are shipped from Italy is in compliance with the terms of the contract. So the independence is a very strong quality of the trade finance instrument. So I'd like to maybe let Phanphruk give more of an overview from the banking's perspective, if she has other examples.
Hi, Lucas. Thank you for that. Actually, Kun Lucas touched an important part already. For doing business, actually, they have two major leaks, which is first of all is operational leaks, which is as Kun Lucas saying that the quality of the shoe is not quite the same as our presentations or inspection or agreement at the beginning. This is all the operational leaks. The other leaks is payment leaks. As Lucas says, is that the operational leaks, we bank as a bank, we cannot make the guarantee for that one. But LCTR, trade transactions, and LG make in the perspective of to guarantee payment leaks of the particular transactions. For example, like if in the case that we send the good quality of the product to the clients already, then the client have to make the payment. This is when the transactions coming in as a bank to guarantee the payment, only the qualities and the performance is not within the guarantee of the bank.
Correct. And I wanted to add just one thing. That's why they're called, for example, documentary credit, because the bank has to check the compliance of the documents in the credit. So for example, that all documents are presented correctly, bill of lading, multimodal transportation, all the documents are compliant with the credit, and then upon presentation the bank is bound to pay. So regardless of whether or not the quality or even the quantity of the goods shipped is different from what stated in the underlying contract.
Mm-hmm. Yeah, great.
There is one more question. Is about talking intellectual property, registration of brands. We happen as a chamber to be addressed several times from brands willing to open in the Southeast Asia region with, of course, important investment. Of course, we suggest them to register the brand, but from a bank point of view or from a legal firm point of view, brand registration is also something that help the bank to understand let's say, in doing due diligence of a company that would like to purchase some of your services. And for example, if you have a fashion brand, would you suggest to register in every country in Southeast Asia region, or for example, one register in Singapore or Thailand would be enough to later on address the market and be eligible to ask for expansion and asking for line of credit? This is probably more on intellectual property, more probably on a legal side, perhaps.
Okay, sure. I can give an example of the answer is yes. I think that it's very relevant, very important, and very useful for companies, regardless of their industry, to be protected, to have their IP protected. We have had cases of clients that have been copycatted by other companies. For example, companies that were engaged in trade. So again, speaking about international trade, most likely we're talking about documentary credit, supported transactions. And we had instances in which the local retailer of the client has started doing business without, unbeknownst to the exporter. For example, they started selling the exact same product with a different brand. So clearly, this is a detrimental fact for the exporter, although the exporter is not responsible for the quality of the products that are sold on in the foreign market if they don't have access to the production line. But the production is actually done in contravention of copyright copyright of the exporters. In that case, we had to sue the company that has illicitly branded as and posed as the exporter. So the answer is clearly yes. It could create also reputational damage. So even if the exporter is not responsible for the misleading information which is spread in, for example, Thailand by the former importer, then they would consequently have a reputational damage which could affect also the eligibility to credit.
Okay, can I touch a bit on the facility for this one? Actually, in Thailand, I believe Kun Lucas may add this one a bit. We already launched the Business Collateral Act, which ideally IP should be one of the collateral lines. But as the technical from almost every bank, I believe that we still cannot evaluate the brandings. So that's one. I believe that in Thailand, IP is not one of the collateral that we're looking for. In terms of the financial requirement on this one, I believe as a bank, we look at IP and value of that as a track record of the company. What is their reputations? What is their potential growth of the revenue, that kind of thing.
A supply chain series of webinars focusing on this.
That is it for me.
Okay. Thank you very much. I would like to ask if anybody would like to bring some other topic in the chat, or maybe we are going to. So far, we don't have any other question, and perhaps we can go to the conclusion of the webinar. And Luca and Ketsuda, would you like to add something else? And before we go to the conclusion.
I think the topic is very, very interesting for everyone, especially now. Maybe in the interest of time, I think we've been a little over the initial deadline. But I don't know if there's any other questions, or if there's questions that people want to ask to either of us privately, feel free to do so. You have our email contacts. I think if UOB agrees, also the presentation can be shared as a PDF document. And again, it would be a very long discussion if you were to address every single frequently asked question and issue that arises when companies are applying for lines of credit. But again, if there's questions now, happy to address them. Otherwise, we'll be available to address them either via email or in person with whomever wants to have a deeper understanding of any of the topics that we discussed today.
Okay, thank you, Luca. I don't see any other questions, so I would like to conclude now the webinar, and the video registration will be probably available by Monday next week. And of course, we will share the presentation and information for the participant. So if you have more something that come to your mind that you would like to ask, you can ask directly later on with to Kun Luca Bernardinetti from Mahanakhon Partners Group, and to Kun Ketsuda Phanphruk, Executive Officer of UOB. And so anyhow, thank you very much to support this webinar. Thank you to the participant, and thank you, Luca, to bring us this important content from UOB. I really appreciate, and thank you, Kun Ketsuda, again.
Thank you, Michele. Thank you, Kun Ketsuda.
Thank you, everyone.
Thank you. Have a good day, and I hope to see you July 14 in Flamenco for the first networking event post-COVID. Goodbye, everyone. Have a good day.
Bye.
Thank you, Luca. Thank you, Kun Ketsuda, again.
Thanks.
Thank you. Bye.